Good morning. Happy Wednesday. Happy Coinbase IPO day. Happy start to earnings season. First quarter earnings season. Once again, welcome. We have some fun things already starting. Some insane numbers from banks, which, I mean, we already had expectations, but almost all of them beating expectations as usual. Which, okay, all memes aside, obviously they're going to beat expectations since they're the ones that set the expectations. But, I mean, the numbers they're pretty stupid. It's pretty stupid that institutions can make this much money and also be so large and nimble at the same time. How does JP Morgan make over $9 billion in trading in a quarter? From just fucking trading like we do. In a quarter. Money they took home. Like, they actually took the money home and realized it. It's not like they bought shares and sat in it. Or they bought bonds and sat in it. They actually took profit on over $9 billion in a quarter. Overall, they made over $32 billion in the fucking first quarter. That's just insane. That's, again, a lot of this is due to where the market is right now and the way in which we're trading it. These are the sort of confirmations that we look for. And sort of when we start to look at what exactly they're doing to see where the market's going in the future based on their trading already, we see that they're taking reserves off, right? If you look at, they haven't been producing as many loans, but even then, so that's sort of the negative part of what we saw in earnings. But what we saw is that they reduced their reserves, and I talked about that sort of almost $10 billion that every bank put on for reserves from COVID and how they're going to scale it back. We get confirmation of that today with the numbers that they actually took off $5 billion of reserves just right this moment. So they just took off $5 billion that they can now go, they're levering up by doing so, right? It's more cash that they have on hand. So you have all of the money that they're making in terms of revenue, right? I think the profit comes out to like $14 billion, with $14 billion of profit. That's $14 billion of cash that just one bank has. And we know that they're most active in the market right now. Institutions are very active in the market right now. We know that right now that bonds are having no problems in the auction. We just had the 30-year. There was no problem. That would have been the one that, again, you have the 2-year, which is the one that the Fed's going to be most sensitive to. No one really wants to buy 30-year bonds right now. Who the fuck wants to wait 30 years for anything? And so that had no problem. So they're even using the cash to just go buy up all the bonds to keep the market stable. If everyone's willing to do whatever it takes to keep the market stable and keep things going, then things are going to continue going. The big boys in the room, the round table decides to do something, they're going to do it. And this, again, is we're talking about a moment in time, but a moment in time that it's actually explaining us the future a little bit more, because any trades that are being made right now from institutions are on the backs of inflation and what's going to happen with interest rates, right? That's the whole discussion right now, and all it's going to matter. Right now, we're getting a glimpse of, like I always talk about, it's like this 9-month lag on this fundamental idea. It's going to take until next year for us to really, 2022, we'll start to get the inflation idea. These CPI numbers that we just got yesterday, we talked about them. They were hotter than expected, but this again it's not really so much right now. You and I aren't going to feel our consumer prices going up right now, and we probably won't ever anyway, right? We probably won't anyway. That core number, we're not really gonna feel it. But this is where there's a different part of this inflation that you do feel and that we're a part of, and that's the market. And it's really easy to ignore it, that the market's appreciating with this idea of inflation, and it's really hard to get a grasp of that. And that's where yesterday I started to change my tone last night, or at the end of the closing session, is that, or end of the morning as well, is that you have to realize that we're entering this different phase now, where we got confirmation of these ideas, and so the trading, we're going from an in the moment where, for instance, we take a trade like down over here and we're betting growth's going to break out. We're not going to change that style, but how do we capture these moves? We're trying to capture these on these very quick swing trades and make a 100% rate there. Those trades will still exist, but there's more important trades to be being made right now. And that's getting all the cash. So from my perspective, getting all of my money in the market and to be able to capture it over a longer period of time. Because I don't want to have to sit out on the sidelines during this whole time. Is there nothing that I can't have my money in the market and make money on something, have exposure to something? Again, we're not going to be perfect on timing. And we know the timing is going to get worse now. Because what's happened now is we've gotten confirmation of these ideas, and these trades have already been made and set. Ideas are set. All that changes now is whether or not we're going to beat inflation expectations. A lot of that inflation is priced into the market. That's everything you see here on the growth side. We've already priced in all of the inflation over here from the yield scares, creating a baseline of yields, no longer worrying about yields, and now this appreciation we're seeing, almost all of that growth and in the idea of possible interest rate hikes, the idea of inflation, based on the numbers we have, is already priced. That's a reality. You have to just accept it because that's where we're at. Now, a lot of our bets have been that this shit is going to continue. We continue to continue here, which has turned it into a really great bet and having really good confirmation of that plan. But again, where we go forward from here, what's going to change the tone in this trend here is whether or not when numbers continue to come out here, whether they're hotter and sort of being a little bit quicker than expected. Inflation picks up a little bit quicker. That's the only thing that's really going to change a trend here. And that creates a difficult space to be in because if you're not in, you don't really have these opportunities to catch on a short term. And you just have to accept the fact that you're not going to have as good of an opportunity here anymore. Maybe it's going to take fucking 6 months. You don't even know. Maybe it just trends forever. I'm just spitballing some silly ideas, but it's the truth that these sort of things happen. That's why we take advantage of our moment and understand where we are now. We are buyers up here. It's very weird to say that we're buyers here, and I still have friends of mine that I have a side bet going on of green candles. I'm getting paid on another green candle. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Gonna be 14 green candles if we get a green candle here. That's an unprecedented amount of just continuation, right? Realize why that's happening and realize what's being priced here and realize, okay, are we going to get this violent pullback opportunity again here? Yeah, there's going to be something, but are you going to be able to time it? Because what's the next trade going to be based on? We have earnings. There's going to be volatility during earnings. Are you going to be able to get in on trades where it's just bouncing back and forth? Or it's not an actual consolidation. It's just sort of this, oh, one candle's down 5%, one candle's up 5%, down, up. Then you can't trade on. The timing, you're never going to be perfect. That timing will never work, especially with options. And if that volatility is already understood to be there, the problem with like earnings season, right, is that everyone already expects the volatility there. IV is a metric of it's not expected. It's everyone has an idea of volatility, and then volatility is more than was expected, so IVs are higher. That's all that IV is. That's where trading options gets difficult, is if it's all expected. If everyone expects there to be volatility, then there's actually no volatility, right? Because that just means it's just normal. That's the thing to realize up here, is that we're in this area now where everyone's doing the same thing again. Everyone's doing the same thing again. That doesn't mean we're going to have to go do something different. If there's nothing different to do, then we can't do anything different. We're all in the same lane. So it's important to realize that we're all on the same bus right now. And who's going to do the best? Everything over here now are marginal trades. And if you have more money to throw at something, you're going to make more money, right? If all of us can go make 10% on a trade, the trader that throws $1 billion at it instead of $10,000 is going to make more money because you're going to make the same percent. There's not really we're able to be very quick and get in and out of position, so we're able to make a lot of money here. That starts to go away. It does start to go away, and so that's where, again, being a trader where this is income and not a wealth idea, this is where you have to start to realize that, okay, my income is going to start to dwindle over here. So this is where I need to start to elongate my process, and I need to start to have positions push further than just swing trades. I need them to be further out. And so that's where I talked about expirations. We need to start pushing expirations out because we need to be a part of moves longer than before. And that's just where the market is. And you have to realize when it's that change. So this is where really we need positions. When we put money into a position, we need to be thinking on the spectrum of, okay, if I'm taking this position, I'm putting my money in here, I could just get exposure to the S&P or the Nasdaq, right? Nasdaq's looking great. Growth is doing very well. Expect to be there. It's beating the reinflation trade because, again, the reinflation trade has already really put the points on. So the growth is really the one getting going here. If you're not going to beat that average, then the money should just be put there. So there's even a lot of reasons to go just take some of these longer term. Again, I still use some of the leverage ETFs, but you need to get exposure to everything, and you don't have so much of an opportunity to take these very short term trades, at least with a significant amount of money, right? There's no way I'm going to get like over here. I've got 100 different charts I can go put my money on and make like these ideas of trying to get those 100% trades. Those 100% trades are going to be far and few between up here. And this is where just getting my money in the market and being able to just get exposure and be able to get profit on that and compound it. It's not going to be beautiful. It's not going to be 100%, but it's going to be exposure and points to be made. And if you don't, then that's the part where it actually starts to hurt you, because what will happen is I'm going to realize that I can't make those type of trades up here. And so then I'm not in a position and I'm waiting. That few days you wait, that week or two that you wait to put your money in the market, when you go back in hindsight and look, you'll see the amount of money that you would have actually made in that period. That's like the people that are FOMOing over here. They look back and they go, oh shit, I was here. I could have just put money in there. All you had to do is just put the money in the market and you would have started to appreciate. That's where over here you just have to realize I just need my money in the market all the time, because every day that I'm not getting compounded is going to hurt me tomorrow, because I don't now have the capital to be able to handle the situation. Just like banks knew back when COVID started to go put $10 billion aside. And look how well they've done because of the way they protected themselves by just having the capital there. It's that kind of idea where over here, it's the same idea that you just need to have the fucking capital. And if you haven't taken advantage of moments, okay. But now you have to take advantage of a moment of just being exposed. You just have to be having exposure to the market in the appreciation. And that's where, again, it's not easy. It's always different. It depends. And it's not going to be easy. It's never easy. And it's not easy for people to keep buying up here. We're holding positions, we're buying new ones, but anything we buy here is not like what we bought down here. I expect this trend to continue, and I expect us to be very bullish and continue to be very bullish, and this trend could just be very irrational for a long time, but it's still very different from just going to go buy from some May monthlies, right? You go buy May monthlies and no, that ship has sailed. That ship sailed. You're going to have to, I want 100% of my cash in the market. I'm going to need some longer term, right? And so look at charts through that angle and see if you can find a way to maybe justify some longer term ideas. And this is where that macro understanding comes in. And that's where all of our trades were already based on macro ideas. Any short-term trade that I only hold for 3 days, it still had some sort of bullish macro idea behind it. And we understood the flow behind it. And that's where being disciplined and always making decisions through the same lens really helps in this moment, because, yeah, I might be changing what I'm buying. Every day we have a different ticker we're buying. We're looking at a different ticker, but we're still using the same ideas to make those trades. We're just buying something a little different here and changing up the timing. And we have to manage that through that different lens, which is, okay, we're not as short-term. Short-term, we have to kind of just sell whenever there's any sort of pullback starting, right? For longer term, we can hold through some of that. A good example would be, like I have bank positions right now off of this pullback. We traded it from here, right? Started to take profit on some of that move. Think about how long this process is. What's the best trade to have made from this low up to over if this high? If you could just make one perfect trade, it would be to hold one trade here. That would have been the most perfect trade. Now we can't do that as traders. We don't have the ability to do that in the way that we've been trading, right? Where we try to take these short-term swings with options, betting on speed. You don't really know the speed. We have ideas of trends and what the usual velocity is, right? So we try to time it as perfectly as we can. But what about in this moment? You had to take profit, right? And so then you're out, and then we bought back in, right? And so we get back in. That one moment of time where that money's not in the market, it doesn't mean as much in that moment because of the way we were trading. But over here, this moment over here, if that happened over here, the difference is that the money that you would make in this sort of sense is very different over here because of where the market is and how we've continued to trend. Your risks are continuing to go up as price increases, and your reward is starting to dwindle because you've been on such a trend, right? The volatility everyone's expecting now. There's no, over here, no one's really expecting this trend to be so strong and sharp. Over here, there's already an expectation for it. Everyone already knows banks are doing well, right? And this is where the market starts to get into this period. Just like when we look at crypto, we'll talk about Coinbase in a second. When you think of Bitcoin, well, now everyone's like, well, I mean, institutions are buying it. It's probably going to keep going up, right? That's very different from last year when come COVID, Bitcoin crashes. And then we go through a period in the summer where basically no one's doing much of anything with it, staying around 9,000. And then you can go load up a big fucking position and sit on it for a year. And now you're up 600, 700%, right? And now there's expectations it'll keep going. And so based on where you got in, there's different ideas. Over here, the volatility is going to be it's going to be lower, and you're no longer getting, on the option side, your premium level is no longer increasing because your volatility is not increasing. And that's really what I mean here is if this just keeps trending, you're making less points. You're not making more points. Usually when we take these trades, we talk about price going up. And now for every point that it increases, you're making more points. That's not really the case if the market continues to trend here because it's expected. And so again, that's where you have to realize the difference there, which means you need to be willing to hold through something like this. There has to be more that you're willing to go through because the risk is that you exit it and you have to get back in. But the price that you're getting back in for is much higher. It's much higher, and again, your risk reward is going down. It's just going down. That's the reality. So this is where, again, things get difficult. You take advantage of the moments that you have. And again, it doesn't alleviate the fact that at any point you don't continue to go in a straight line. Of course, you're going to take profits. And so that's exactly where being prepared for the decisions that need to be made for whatever take profit or consolidation starts in the market is really important because it's not so much that, that it's going to come down in such a way that you have to exit all your positions. You have to realize when you need to actually be making that decision because I could hold through a 5% pullback here on some of the things I've set up, right? Do I want to do that? In some situations you do. In some situations you do because you want to just keep your money in the market. You can't do that with options that are very short dated, right? You have to get out of those immediately. And again, that's where now you're in this situation where you're sitting on money and now you have to figure out how the fuck to get it back in the market. There's not really good ways to do that up here. There's really not. You can be a buyer, but what are you buying? The only thing that you can really buy on the mega cap side is Apple. Apple's still pretty far behind. But again, it's pretty hard to go buy Apple here when you realize that there's a lot of people that bought it down here and have been able to push it. I'm in this position still, but I'd still be a buyer here, but I realize the difference in how that feels and how it looks and how I would manage it differently. I can't go buy a short-term position here. It'd have to be very long. It would have to be much longer term. Over here, you can buy as short as you want because you're buying at lows and you're taking a risk that something will happen with volatility. You no longer can take a trade and say there's going to be more volatility here. What is it going to go fucking to 200 in like a day here? You'd have to be betting some ridiculous things for higher volatility, right? That's not where we're at. We're at all-time highs across the market. Shit is super bullish. We're going to be appreciating out of our mind. when corrections and things happen, we'll speak about them then. But until that happens, we're not going to do anything. We stay on the same path. A bunch of shit's up pre-market. We have clean energy maybe coming back a little bit. That's been kind of rough around the edges. That's the one area that we're looking to maybe pick up. We understand that semiconductors have going through this little supply phase that's seeming to be okay this morning. Again, Nasdaq's all-time highs. Everything's going to get to its all-time high. If it's from a lower point, like down here, it'll catch up to the Nasdaq. The reinflation trade obviously has slowed down as this demand gets here. We'll see how that changes and which areas and sectors there are worth holding through, right? Banks are obvious. Energy, I think, is pretty obvious still. We'll keep those benchmarks, right? Okay, today, Coinbase IPO. Again, I don't trade IPOs. So, no, I won't be buying Coinbase. Does that mean you can't buy Coinbase? I mean, it's probably going to fucking go up. So, I mean, you want to buy it, then sure. But you need to realize if you're buying it, it could be down for the next 3 months. So, based on where you buy, depending on where you buy, you could either be up tomorrow or down tomorrow. That's just the reality. So, again, you're worse than 50-50 if you buy today. You're just worse than 50-50 is the reality. So, I mean, it doesn't really matter. But the point being, it's having a direct offering onto the Nasdaq. I think it's the first time for a direct. I mean, it's pretty big. It's pretty big. It's not $100 billion. I think I keep seeing the $100 billion number. I think it's like they're at 60 billion or something for a cap size. That probably gets pushed up to 100 or something at some point. Obviously, they had good numbers and everything else, and it's less of like, you could be like, well, couldn't there just be an easy competitor? Like, you can just offer Bitcoin. And I think it's more of, most of the idea is that it's like it's already a platform and we're sort of already starting this phase. And I mean, yeah, you could buy Bitcoin from anywhere. So there's definitely good reasons for it. And I think what we'll look for today is how many institutions actually get involved. Because again, it's direct, so they didn't go through an investment bank or something. So we'll see how possibly there's a flow there or not. It's not going to happen today, but we'll see how it starts today. So maybe through the end of the week into next week, we'll get an idea of what kind of game theory is going to get involved with that. Because I think people do want to get exposure there, but most of it, again, if you want to be exposed to crypto, buy the goddamn coins. You buy Bitcoin. You buy Ether. You buy whatever you want. You don't buy a company that allows people to buy it. It's one of the sillier things to think about, that you're going to buy Coinbase instead of buying Bitcoin. It doesn't actually make much sense, because if Bitcoin goes down, Coinbase goes down, and it doesn't really, you're going to make a better risk reward than the actual Bitcoin itself. And so that's what we're watching really today. Again, I'm just in my long position. I don't trade Bitcoin. It's just an investment. I just sit on it. The only thing that I'm changing my tone now is that we're climbing so much faster than I would have ever expected. Obviously last year I said Bitcoin's going to 100,000 and then I get called crazy, and now it's at 65, almost 65,000, and now it's going to be reaching 100,000 on this trend in fucking a couple months. So now it's like, okay, well, shit, what do you do in terms of decision making here? It's important to realize that banks did get involved really early, and the fucking lie that they tell is that they didn't, and that they're just now getting involved. It's really important to realize that there is a lot of institutional money back in this whole area. When this thing starts to ramp up, you already know that they're getting very involved. Not to mention just they were already sitting on them. Look at the amount of money they make. Who do you think's fucking mining this stuff, right? Who do you think's actually has the resources to do a lot of this? It's insane to think that the big banks aren't the ones producing the fucking coins in the first place. Like, they're the only ones that have the cash and infrastructure to do some of these things. The thing to be careful about up here, and the reason why I've changed my tone about how quickly I would take profit on this and why I expect it to go probably it'll just keep appreciating like gold will, right? With the stock to flow model, it's truly the model. It will keep appreciating. It'll go into a bullish market like it is now, and then enter a bearish market for some time, and then go back up. It's going to keep going past 100,000. But once it gets up here, I'm going to take the money home. It's going to be 1,000% gain for me. It's going to be the biggest chart I've ever made in terms of, because I've just sat on it. I haven't traded it. I'm going to hopefully it's over a year and I can pay less tax on it for capital gains. We'll see. But as soon as it gets up here, if this thing starts to elevate this way, right, and come off this trend and get sharper and sharper towards the upside, I will take all that money and I'll keep a little bit there, but I think there's still reason to take that money and to realize that, okay, I expect it to go higher in the future, but there's a big difference between just taking something for a trade and trading it, and people will trade it, and then realizing that, okay, this is a very different sort of situation, and if you have that much money there, you should definitely be realizing it. I would say realize it if this thing starts to get hot over here. Let's say we reach 100,000 by the beginning of summer, which is what the angle is now. You're talking about a situation where institutions are also in a position where they know they can make more money on that money because they're fucking institutions, like we've seen. And we're talking about this, the cap here is growing and growing. It's going to be like, we're already at a $2 trillion cap on cryptos. $2 trillion is a lot of money. Institutions in there, if an institution has even just $10 billion worth, $10 billion is not going to crash this thing. You could take $10 billion and this thing will move like 1% or 2%. So institutions that have tens of billions of dollars, they're going to want to take that profit at some point. At some point, the risk reward comes in, just like I'm thinking. You have to remember how violent those moves are. And this is where that optimism is going to fucking sneak up on everyone. And then as soon as this shit starts to get going, I'm not saying it's going to go to zero or something, but I don't want to have to wait a fucking year to take my profit. I'm going to take my damn profit before that happens. So realize that, and institutions will do the same thing. Institutions will keep playing the game, but they're not going to sit there and wait a year to go take that money. They're not going to do it. This whole Coinbase thing is just going to make that idea worse, and people are going to get flooded in there, and they're going to get game theoried, as always. And it's no different. It's no different because, again, you have to realize what the whole reason for institutions being involved there and all these things is for them to make fucking money. And if they can make money today, they're going to take it today. And they're going to push that up to the absolute peak of their risk and just drop the damn thing. I believe in the Bitcoin idea. I'm just saying that I don't want to wait a year for it, right? I've already waited a year for it, and I'm going to be, if it goes to 100,000, that's 1,000%. But realize what the Coinbase IPOs does here. We'll see what it does. If we don't see direct buying into Coinbase from institutions and they're pushing Bitcoin, then that's what's happening. And again, we're talking we're going to be taking profit on it. So keep that idea in mind as well. Because I mean, there's definitely different ways to play it, but as an institution, if they know they have buyers for their positions, then they're going to take it at the point where they can fill the most liquidity all at once, right? They're not going to wait to sell everything. They're not going to do it in chunks. They do it all at once. Based on the numbers we already have, they're doing pretty goddamn well at everything else. So they're going to be doing whatever it takes, right? Whatever it takes to keep getting more cash. But just an idea to think about. Again, it's not right now. It's not right now. We're just kind of getting into the season of those thoughts, of keeping that in the back of our minds. Okay, let's see what we get here. Again, everything is very green, folks. Very green. We're looking to push further. That's where the hardest part is. Again, we've had sort of 13 green days in a row now, it's very hard to continue to have that buying mindset. And this is where you want to shift that focus to longer. If I buy something today, I better be in it for a couple weeks here, or else I'm making a, or else I'm probably, you know, it doesn't. If the market continues going up, I'm saying for that plan. Of course, if it ends up trading sideways or we start to consolidate here, then that's not the case. But for the market to trend up here, and I want a nice base of a couple percent, and then I can push that for a longer period of time, and I don't have to buy it in a couple weeks. I already have it. Okay, the ICLN finally we got it. We're outside of that trend line now. Ramped it a couple too many times, but it's all right. DA coming back. Let's see. Snap catching back up. Let me put these to dailies. Snap getting going. Again, it paused the last couple of days. This is exactly what I'm talking about. We hold through these. Trade from this level up to the trend line. This is, you still probably have short terms on this. This is where, when we get up to here, we're transitioning into a longer period of trade. You should have, I mean, again, this is where if you can gradient it and get those short-term trades and long-term trades at the same time, then it helps because you can continue to push that long-term trade from that first entry that you have sort of on the break, and then you can take profit on the short terms, and it allows you to do both at the same time. But most people don't have the capital to do that on every single ticker. I don't even do it on every ticker. So again, that's where the transition comes in. MGA coming off the open. What's going on here? Okay, there it goes. Jesus, what that was. Travel coming off a little bit. STC did open higher. JGR mentioned. We'll see how travel does. Again, travel's so short-term volatile right now that every time there's an opportunity in growth, people just take profit on their travel trade and go put it in growth. Realize the activity. Realize how active that travel side is, just like we've been active on it. People are doing the same thing. Opportunity cost. Take profit on a move to go put it somewhere else. Like that's things that you know are volatile like that. You just have to realize, okay, that's not my long-term trade. That's not. That I need to get in and out of that trade for any time that happens, and that's certainly a possibility. CRSP coming off. We do have clean energies coming up around most places. Energy in general is climbing, which is nice. PLTR continues its rate at the trend line actually on the daily. We'll see how that goes. That's obviously a nice trade that we actually, timed decently well. We'll see how Z does. Home builders have been doing very well. We'll see how Z catches up. Z is definitely a longer term trade. If you take this and have taken it, you should not be in a situation where you're in and out of this. You need to be in a position where you can push this. Think about the trade that we made back here. I was in that for months and months and months. That's where some people exit the trade immediately, and then you can hold through everything and push it. This is one of those trades here. You know how it trades. If it's a trending chart, those charts that stand out as charts that trade on trends, you got to be able to sit in that for a longer period of time, and you want to. It doesn't matter if you don't make 100% in a week. It's the fact that you can have your money in there for a month and get exposure to every single day getting that money compounded. It's such a easy concept to throw away at the moment, because you're like, well, I could just go buy something else and possibly make money on it. No, no. It's like saying, well, I'm not going to put my money in the S&P because I could make penny stock trades. Okay. We'll see how space does. I mean, this hasn't really taken off yet. Again, another trade that you want to be a little bit longer term focused on. I mean, everything should be longer term focused. There's still going to be short term trades, so not to throw that out of the wagon, but we'll still take the trades when we can get the points. We'll get the points, absolutely. But for instance, I made the comment of day trading yesterday. You're not gonna be able to day trade today, right? it doesn't work and that's where that optimism hurts you because you're like, well, I did it yesterday, I'm going to do it today. And it's like, well, if you just pushed through those 2 days, you would have, the JJ was like, challenge accepted, go make 100% every day and show you. But yes, there's opportunities to do that. But this is where if you entered a position and now you have that as a baseline, let's say you bought long terms and off of these 2 days, you gained 20%. That's 20% you have as a bedrock to a position that you can push for a month. Whereas if you take 100% on a small amount of money, you have to make that 100% trade on, again, let me fucking phrase this correctly because it's the problem that we all face. You can make 100% on a day trade or like a very quick swing trade here from yesterday, right? But that's on a very small amount of money. Long-term trades, you can put more money into it. So 20% on a large trade is more than 100% on a small trade, right? And it's over a longer period of time, which means you're making less mistakes in that time because you're in a position that's trending. The difference there is fucking life or death for your portfolio, right? Making 100% trades is a lot harder than making 100% trade on the same amount of money you'd make over 100 trades, right? Those are two different things. And because you're never going to be perfect timing everything. There's moments where we're very good at timing, but then it goes away, right? And that's where it's very important to be able to just sit on the money. Do the timing as well as we can. And that's where having a baseline helps. We'll see how COVID winners do. Etsy continues to trend here. I couldn't imagine being in like a short-term position for some of these. Again, we're looking for the next. Having internet issues again. Hold on. Hold on. All right, that should have fixed it. Again. Okay, very nice numbers up to start here. Oil coming off that low. That trade from last week, really nice. Again, things like plug again. These trades are not easy and have been an absolute mess. An absolute mess here. Back and forth, really unclear on some of those. X coming off the low. We'll see where some of those go. Again, the question is somewhat on the value side of how much more is there behind those moves? How many more points can be put on? How much has already been priced? And a lot of them, again, are consolidating. And so that's where, if you're not in a long-term trade, then you don't want to be sitting in a consolidation. So those are very different things. Doing nothing. We'll see how the energy move comes through. Again, the price action from on Monday was very strange because we opened over % higher on oil, and then we sort of took profit on it, and now we're coming off the low again. This looks very promising, but again, this is a long-term trade, so it doesn't really matter what your timing is over here if you're pushing it up here anyway. These points, if you make a long-term trade, you're getting basically no exposure to any moves over this period here. You could have bought anywhere in here and be in the same, you'd be at the same profit no matter where you entered here if you took a long-term trade. So, because again, the point or two doesn't matter here. It's the points over here that would matter. And that's where those long-term trades, you don't have to be perfect on timing. It's about getting points later that matters, right? Not right now. And that's kind of what we're trying to do here is we made trades that got the points immediately, and we were able to figure out where exactly we're transitioning those. The trades now, it doesn't matter what happens in the next few days. If it goes up 5%, down 5%, those probably don't fucking matter at all. What happens later? X is getting going. I mean, again, industrials definitely those direct recipients of government money. Digital says $52 left. What should I buy? $52? Buy a couple t-shirts, new socks, coffee. Yeah, a couple bags of coffee. GME 800s. Nice. GME is coming off their new debt plan. I love the gamma moves everywhere. You have like triple BY getting pegged down from not in continuing acceleration. You have things like GME fucking launching off. All these different back and forth moves, just again proving that short-term volatility and why it's such a mess. That last week is such a mess on all those. This, it's just obvious, obvious, on all these different moves, obvious. And it almost makes you think like no one's actually trading. All right, we're pushing back to all-time high on S&P at least. Nasdaq's a little bit further down. Dow through all-time high. Again, value getting some help here on the downside. We've continued this trade. Again, banks. I mean, obviously banks, banks, and industrials. VA coming back. Had slowed down a little bit. Obviously, we looked at some trend ideas here. You know, some of this it's just kind of obviously you make a big move very quickly. You consolidate. Some of them though. We talked about some of the moves here, and we kept buying the low, and there was a reason why to keep buying it. Disney, we talked about, is sort of the next trade. It was sort of the tertiary, now it's sort of the tier 2. This idea of a diamond in here. Again, I'm not going to post the whole diamond. If we get a pattern here, I'll just do the triangle over here. But even this is elongated. Look how long it is this way. But these trades definitely help in the downside of things, and again, like JP Morgan being low here, it doesn't matter what it does today. That's where the earnings thing doesn't matter, because if you take this trade, you're not taking the trade for what the price is today or tomorrow. You already knew that JP Morgan was barely moving through here. You already know this, right? You already know that this is a mess in here. That's why you look at these other charts and you can just feel it and tell. And then go look at Bank of America, right? Look at the trend here. And so these things, you already sort of, you know if you're taking the trade for right now or not, right? These are not secrets. It's not a secret. What was I looking to do on this? I'm not sure. I love this chart though, by the way. The Honeywell trade from when we first started the Dow play, this mess over here, understand the consolidations there. Then I'm like, oh, fuck me. Then the move coming thereafter. Oof. Really like that move a lot. Healthcare. We'll see how that continues. The banks that did the best at trading are definitely the ones getting the points the quickest. JP Morgan is a bit of an exception because of size, but Goldman, for instance, being the second in line in terms of trading. They did 7.3 billion, I believe was the number for the first quarter. Just fucking insane amount of money, guys. That's for their trading floor is is like 100 people. So we were talking about it's just so silly to think about some of the I don't even that's the impossible job to get. And think of all the people that already just left Goldman too. It's like such a weird that Goldman thing is so fucking strange. And just think about those fucking poor people working in the Jersey building. Goldman has the largest building in Jersey City. You can see it from Manhattan. You can see the Goldman Sachs building. It's like these poor people that have to take the PATH train over to the fucking Goldman building in Jersey every day. It feels so bad. No wonder why everyone's leaving. I mean, there's still an office in New York City, but the fucking people that have to go over there, fuck that. Uber takes an hour to get to Jersey City in the morning, so that's not happening. So you have to take the PATH train. But the PATH train goes right to the Goldman building. It's a great perk. Like, dude, you realize that I trade up a $20 billion account? What do you mean? This move is great. Great. Again, proving the point. Proving the point. Contemplating this move here. Tightening on J&J. Again, the whole... I don't... Does anyone else understand what the fuck all the fuss is about? There's like 7 people that got blood clots, and out of like 7 or 8 million people that get the vaccine, like, what the or I have no idea. It's like, you realize the people that didn't get the vaccine are dying, and these people got a fucking blood clot out of like 7 million people, and it's like, I don't understand what the fuss is and why that's happening all of a sudden. It's a very weird time we got into that all of a sudden became. What about all the other normal people that have problems from the other drugs they take, like, for their health? Like, that doesn't even save their life. It's just for convenience. Like, I saw a friend of mine post something on social media. She's like, do you realize that more people have health problems from just taking birth control than the fucking J&J vaccine? And birth control doesn't even save our fucking life. Like, it gives us more problems. Like, this weird thing that just happened, and then also push the price down here is very fucking weird. Very strange, because investors are a little bit more, you don't really negatively react to some of these things when okay, well, I mean, it doesn't really affect the over-under on this shit. Oh, well, apparently it did. So J&J is definitely something I'd look to pick up here. It's slow. It's a long-term trade. Part of the Dow. It's already been in a consolidation here off of a low. If we're setting up a trend here, I'd be all for it. So I'd look at that if you haven't looked at it. Already picked up some stuff. One of those trades that maybe news does help you. Because it's sort of I just find the concept silly. To be like, well, 7 people got blood clots, so... Like, I understand. But... You don't want to be taking a vaccine if it... I don't know. I don't want to die, though, so... If they're gonna give me the J&J vaccine, I'll fucking take it. Do it live. Give me the vaccine. Give me the blood clot. At least I won't die. Or at least I won't spread COVID to other people and kill them. But I guess most of us are psychos. No one cares about killing other people, right? Fuck it. Well, I don't care. Well, it's like, what, do you care about your grandmother? Nah, fuck her. She's got money. I want her dead. Oh, yeah. Sickos. Myrna, 5%. This has been a great trade. Sneaky trade. Very sneaky trade. Very sneaky trade. I like my sneaky ones here. Some of these are definitely, it's pretty sneaky. We traded the trend over here a little bit. Didn't get any of this exposure to this shit, but this one will take that. Take that win. And take that win. But Don, isn't that whole thing just a news trade, you loser? Maybe. MJ at the trend line. Or what we're doing. I shouldn't be right on this one like that, but again, a lot of the don't forget this whole super cycle idea on commodities. It's really easy to forget about some of the other things that we've already talked about on a macro level. Realize what's happening with commodities through inflation as well, and realize that it predated the inflation discussion. The idea of a super cycle, this very bullish phase in commodities that they'll appreciate in price, but also realize what happens with inflation on top of that. This is one of those things that everyone just realizes the cycle and then is looking for confirmation that this sort of shit's happening, that prices are going up for these things. There's not good ways to get involved on the equity side directly. And so this is where we have to take what's there. These are not easy trades, but something like this here, I mean, it's just a nice fucking trade. I don't know. It's a nice trade, but again, don't forget about gold, silver, and then all the other commodities. This is aluminum. I mean, there's a lot of examples, and it doesn't need to be directly. It is a little different. Like I talk about Bitcoin, just buy Bitcoin. Don't fuck around with the companies. That's because there's literally only one company that is public for Bitcoin. If there was 100 different companies, that'd be different. Gold has hundreds of different companies that are directly with gold. So you can trade gold equities. You can trade gold ETFs. That's the difference between the two. But that's why I say buy Bitcoin. Don't buy Coinbase if you want to be exposed. Gold is different. Silver is different. You can trade the actual companies. Those are situations where there is different, and there's a different means for the same end, but you know, sometimes the means are cheaper on the equity side. You get a better ratio. Right now, that's kind of the point of coming through the super cycle is these are going to affect things, and they do affect prices. That's like the lumber prices affecting home building. Realize the discussion I talked about, even semiconductors, where there's a supply chain problem, and so there's a shortage of supply. It's going to cause equity market to go up in price. Think about lumber and home building and how many homes are on the market. What's happening there? Well, there's a lot of fucking people buying houses, not many homes. Price of lumber is going up because of, again, the super cycle in commodities. So lumber is appreciating and is going to keep going up in the future. So future contracts are going up, longer dated. What's going to happen? Oh, all those prices are going to go up? Oh, and they're continuing to go up because the fucking demand? Oh, right. Right. And so again, think about how these things are all connected. How you can go from all of that and then go say, oh, you know what would be a pretty nice trade? Is to go buy some Z right over here. But not for tomorrow, for like a month or two from now. Right? But you'd have to get it in now. You'd have to get it now because as soon as that shit starts to appreciate and actually affect it, you can't buy it at that point. Right? There's already, that volatility's already been priced. Right when the contract's fucking written in the first place. The contracts you want to buy, you want to be getting them as soon as they're written. That's the difference. And it's not a good way to go about that, but that's where understanding the macro idea and understanding that right now you want to be taking some trades a little bit longer. All those in mind. Some nice call out in chat. Okay. Another all-time high day. Let's say today's Wednesday. Yeah, I mean, anything I buy today, I need to be holding through the weekend. So if I'm in any position right now, I need to be holding into next week, I would say. So that means any type of, again, we get sideways trading days. need a position that I can hold through sideways trading, which limits, I can't have 1 month out contracts. It's not happening. Can't hold through sideways days on that either. So those are thrown out. Starting to go to longer, much longer dates for sure. Also, this is where spreads really, you can get pretty beneficial. Those of you with larger capital, you can start to really play around a little bit. Be like, well, it's not, GME's not going to 800. So you can sell 800s and then buy something a little bit. This is, again, there's different ways you can be positioning yourself to be able to get your money active, right? To get your money active. There's even ways to be buying shares, selling covered calls at an out of the money point that you know it's not going to reach, and then taking that exposure to buy a little bit shorter term in the monies, and the longer term out of the monies that's still lower than obviously what you're selling out of the money. And so you get this nice spread while still spending all your money. You get to spend all your money and exposed, and you sort of win on all fronts, but you can't lose on all fronts. And so again, you're able to get all the money going all the time. Easy to get out of positions. You can sell one leg, get into another leg if you're sort of, no one should be like straddling, but you can definitely produce more and more legs and get this cost going in. I'd just be getting active like that. I know most of you just buy fucking calls and have no clue about anything else anyway, but really not the worst market in the world to be doing that anyway. Who cares? I don't really bring it up. We say long or buying something, that could mean a billion different things. Oh God, I'll see again. We're getting pretty big moves on all of the. This is that weird, very weird flow state that we get, and this is why you need longer term stuff. This is exactly the reason why you need longer term things, is that the industrial side and the way that is moving right now, it's like even with oil, right? This sort of thing, the timing is very strange, but like over here, you can't take a short-term trade, but if you just take a long-term trade and sit in this, you know you're going to appreciate, but this could just sit back, it could bounce back and forth a couple times, you don't know. Same with banks, right? Banks, it's the same thing. We knew there'd be some short-term volatility because of earnings, but if you just sit in this and let it do its thing, you make money. And that's where right now I want to be sitting and fucking relaxing. I want to go have a fucking margarita for lunch, right? And don't have to worry about any of this stuff because I'm pushing trades for the next few months. I think we're definitely, you can see it and feel it right here. A lot of them. It just, the timing is terrible. Like a lot of and I talked about this a couple days ago, where things like even clean energy, you could just sit in this fucking trade. Look at, if I didn't overwork, look at how many times I took this trade here. I took this trade here. Okay, I took this trade here. Had to get out of the trade. Got into the trade. Had to get out of the trade. Got into the trade. And now we're here again. And now if I just took this trade, the long-term trade, I could just be pushing it. I took another short-term trade here, but I put long-terms on because I'm fucking sick of it. And there's a macro trend line here. And the long-term trade is just going to always outperform the short-term one, in the sense that I don't have to take fucking 3 short-term trades here. And it's just, there's an expectation. Again, this is the difference between those things, and realizing how many times I hit my head against the wall. Like, what is this, helmet English class? Where everyone wears a fucking helmet, and they ask dumb questions like, okay, Logan, what is the verb in Logan ran to school? You're like, is it school, teacher? No. And then a good thing I've got my helmet on, so when I hit my head on the fucking table, and protect my helmet. Or protect my head, not my helmet. Right, that's not what we're doing. We're not in helmet class right now. If you guys have a helmet on, you're in the wrong trading class. This is not helmet trading 101. This is just normal. The normal 101 class. This isn't the elementary. Some of you know what I'm talking about. I know some of you guys were in helmet English. Dow looking phenomenal. Fucking just Dow play continues. Again, please use hindsight capital right now. use hindsight capital right now because you need to make better decisions right in this moment. This is exactly what I'm talking about with long-term trades. I want you to think about everything I talked about over here, where how putting this down position on, you don't get hurt on the downside. Where even when the market's not really rallying through on a sharp angle, you're never really getting hurt on the downside. Look at this fucking trend that's been produced. On even these days where the market's really not moving, in hindsight, oh, it's still trending the whole time. You remember, like, in these moments, though, it kind of felt like the market was kind of slowing down, and it is slowing down and coming down. But your long trades are not getting hurt by that. You're actually gaining on your long-term trades as it does that. Think of all those times you've had contracts, long-term contracts, where your premiums are going up as the market trades flat or goes down on those long-term trades. You guys have all been in those positions. That's where right now, that's what I'm fucking talking about, is you can sit in a long-term trade, and even when it doesn't go up, you're gaining. That's what you need to be in. This Dow play is just, it's really stupid. It's a really stupid trade, and it continues to allow me just to have a fucking large portion of my capital in the market and exposed and gaining every day. Yes, I'm putting more and more into this, and we put a lot of money on this move here and are really amplifying it, but it's so important to still realize that that's consistent money and money I'm going to make every day, day to day, week to week. These are not guaranteed. This wasn't guaranteed. Now we're getting into more guaranteed, but the only way you guarantee it is through the trades that you take, right? So, again, maybe use some of that hindsight for sure to filter through some of the bullshit here. Because I know there's dumb trades being made right in here. I know there's really dumb trades being made, and you're going to lose money. Not just you guys, but people in the market. This trading is fucking terrible. What is this? What is this? This is, again, a failure to appreciate where the market is right now. It's a failure to understand. It's just a complete failure. No one should be actively trading like this. But there are people out there doing it because I can see it in the fucking candles. There's no reason to. This is where you get on the ride. If you get on a fucking roller coaster, you don't get to jump up and down and flail yourself around. You're stuck in position and you ride it. These are people actively trying to fuck with the ride. Like, I don't know what they're doing. You gotta, again, and you can see the difference. I mean, it's clear as day. It's clear as day. Look, that's the S&P. S&P, and here's the Dow. This is people that understand what the fuck they're doing. Over here, okay, you got a bunch of retail screwing around over here. There's also gamma-related things that are happening here. As this does not move, there will be things. And so this is, again, where short-term trades have a hard time with this. Short-term trades have a hard time. If you're in a long-term trade, this matters nothing. It doesn't matter at all. Still in some short-term trades, and so now I gotta make decisions. RSP, very nice move here. Again, when you're right, you're right. When you're right, you're right. We'll take the trades again when there's still opportunities to take trades. Any time length, we'll take them, but understanding gonna be less. We're getting interactions on trend lines for sure. Some of these software companies, again, please be careful with some of the things I'm saying right now. I've still talked about these tickers that are on these short time frames like this, that they traded flat for a week or so. They're going to make that move very quickly, right? I've been talking about this every day, especially on the software companies, where it's going to make this move very quickly. That's the move here, this very sharp move that you're trading short term and taking profit on. And then you're looking to make a long-term trade. Realize where that transition's happening. I've talked about this on a ton of tickers. It trades flat like this, makes a move very quickly. You take the profit on the quick move, and then enter a long-term trade. Tesla was another example, right? Tesla, it doesn't matter that it's up again here today. This move here, you took a trade here. This point all happened at once. You take profit on that trade and then put a new trade on if you didn't already have the long-term trade on, to let it just trend, not to rally, right? Turn it into a trend trade, long-term trade. There, you can push it for fucking months if you have to, right? Those are two very different things. It all depends. It all depends. This MOS trade, it's my fault. I didn't post this chart. I just reposted it. I posted it early last night. This was from the 12th over here, and I actually was already looking at it back here and kind of, yeah. And so anyway, that trade yesterday was a nice trade from yesterday, and look at the move here. I think again, this is good example of maybe some bias problems, but you have to look through some of the. It's very easy to look at this and be like, oh, okay, maybe it's not a very good trade here. Maybe it's kind of but it's such a clear breakout that just being disciplined to be like, okay, there's a clear breakout here. Take the trade. There's a lot of volatility that came in. It's paying. It's paying, and so that's again where you don't know which one is going to actually take off, and so you take the trade, and then if it's there, it's there. If again the chart doesn't go as planned, then you're just not a part of it, and you don't think about missing it. But something like this here, this is a very big candle for this. This is very slow price action, less than 1% moves in here. That's almost 3%. That's a lot of points. That's a pretty feel good one because I wasn't sure about that. Again, these software companies like this here, again, same idea. Coming off the support here, this shit is the trend line. This is the level to level trade that I was talking about. All those trades like Twitter, Snap, that go spot that come from the level up to the trend line, that is the short-term trade still, and then it transitions into a trend trade. Those things have not changed. Just realize that most of them already done so, but there's some charts that still haven't done that. So you're still trading these accordingly to, you're betting on the speed, right? Those ones have not changed. ESTC, very cute chart from last night, from that breakout yesterday. Very cute. Again, a little ambitious with the trend line in here, but I think it's probably correct. iHeart continuing from yesterday. It's funny. Don't have any clue. Some charts just get pushed further and further. Halo is a nice one. Halo's a nice one. I mean, again, I shouldn't have to say anything about that. Level to level. I mean, you buy support, sell resistance. There's not much else to it. That's just following rules. Basically everything from yesterday doing well, but it's because the whole market's continuing here. And again, the difference between the market not continuing like it is or taking profit in like a historical way are so different. The fact that this is still going is just fucking oofa. Feels good. Feels good. Again, this is another concept to bring up when we talk about sort of losing confidence in trades and or having confidence in trades. I want to put it into, and this is what I was talking about with like this ego idea, that there might be some behavioral idea for when you continue to make a trade because of an idea, and then you actually do get something, and then you're able to continue to push it, and you don't, there's just something behavioral there. The ability to bank up good feeling. When I talk about green days, red days, you should always just feel the same, traded it the same way, right? There is a reality of celebrating trades that we talk about, and you bank up that feeling. Being right on something like this, I will bank up a lot. It's not about the money part. The money part's great, but there is a part of doing something, and then it works, and so you get confidence for it, and you bank up a lot of confidence for that, and you allow yourself to make many mistakes and learn from those mistakes, but be able to push through it. There is that part of discipline and being right that you do bank up a pretty sizable amount of confidence. This is the kind of thing here where when you take this kind of trade and then you expect it to really continue and even over here for it to continue to trend, that will build up a fuck ton of confidence. I can sit here and make 100 mistakes in a row now, and I'm still going to remember this portion here that I traded the whole fucking thing and bought the whole thing the whole way, right? Just like from the bottom of COVID. I continued to buy and buy and buy, exited, bought, those kind of things. Not to mention silly trades from back here, but just even in the last year, that bank of confidence, not again, profit's one thing, but that is a really big part of the trading here where now I can just keep, no matter what comes at me, if I need to do something for a month, it's not gonna, there's nothing that's gonna stop that ability, right? Because I have a confidence bank, nice supply of feel good moments. Maybe that's how life works, but for trading it, it's especially important because there's gonna be times when you just fucking hit your head against the wall for months and nothing seems to work. But being right in critical moments, it fucking will save you. It will save you a lot of anxiety and money. I think this is a good example. Just it's again learning. Even if you don't make the trades, it's like that learning part and be like, okay, I can see how in that moment you can see this, and it does help. It really does. CRSP is now 6%. Again, we're getting this push on the value things again, which is a little surprising. I mean, we're part of the trades and have been bullish on them, but I am a little surprised. I am a little surprised. I am pretty surprised here. I mean, I've been talking about the Dow this whole time, but in this moment, maybe it has a lot to do with the whole cycle. This move is, again, this was to be expected and obvious. This was the mistake that I talked about yesterday, which is why I held through that idea. Why you can be confident, be like, this is just someone's just taking profit before earnings, because some people do that. They don't want to trade through earnings. That's fine. That's again where you would remove this, and you don't even need to, you can just see it. Okay, that removed that whole thing, and now we're back to where we were. I guess I did forget about some of that action the last couple days. REITs continue, and REITs have not stopped either. Those have been more consistent because most people don't, you're not trading those. You're investing in those. I think we did pretty well on, see, it's the moves like this from it's fine. We don't have to understand why everyone does everything. Some people just make mistakes. Retail store is doing well still. Some of the travel things. We'll see if travel climbs out of that short-term volatility zone, breaks back through the high. Again, they priced on a lot of points very early, so one of those examples of those charts that came out early and then have entered a consolidation, but this still has points to, a lot of these still have points to retrace, but this is where if you just took long-term trades from down here, you would just be taking many more months to gain the points, but you'd be able to capture all of them. Whereas short-term, we're trying to capture in these moments. You don't have a moment to capture here, right? All you can do is take longer-term trades until there's a breakout. Then you could take a short-term trade, but you don't really know. FANG should be breaking out of this trend. I have a couple trades very similar. Retail stores continue. So again, value is doing very well today. So those are definitely easy trades to hold for long term. Some of the Archegos stuff. Credit Suisse sold some more shit last night. I think a question here would be China again. Hang Seng did very well yesterday. But again, some of these stickers are in very, very weird spots, right? Where you get breakouts and then okay, we continue to trend down. Then we took trades, right? So we took trades at lows, like Baba here. We gain it. Okay, now what are we doing? These are long-term trades that you need to be able to push through. And I talked about the ability to take on profit, something like this, and then to push the trade up to here. You gotta, again, the China trades are good examples of that. Something may not happen for a couple weeks here, but you don't know when the timing is. You don't get to control this at all. Opportunity cost though will keep you out of these trades if you don't have the capital to capture it. And so it's like you can't go take these trades if you don't have enough money to also be buying all of our equities. So and also you could be increasing your sizing on those companies that have been doing well. And so that's where there's also that dynamic where putting more than $1,000 on a trade for some of you is going to be more important than spreading that other $1,000 you have on another ticker, right? Those sort of things really start to add up. So again, I mean, it's just difficult if you don't have the capital to spread. Shorter still trading on the trend line. See if Facebook is going to break out of here. And Facebook was the leader, so it's going to be doing this a little bit more often. When you get a candle like this, I usually think of this as a bullish candle. So see how that looks. Small caps come back with banks. Yeah, nothing to do here. I'm not gonna diddle around with that. Dirty Dan. Climbing. Yeah, on like Netflix. Rejected. Being held on supply. It does every time it gets. I mean, this didn't break, so that's definitely you're done with that trade. FYI, you're done with that trade. It's gotten rejected at this level every time. Thought this time would be different. This time was not different. Rejection, rejection, rejection. Ding, 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 ding. We'll see where this changes. Next trade will be above the level. Might gap up to it. There's nothing you can do about that. Your WG still within this consolidation. See when it's time to pot stock our way to victory. Not right now. Uber's still coming out very nice. Again, having a long-term trade there would definitely be better than short-term. You can't really hold through those moves on intraday. What do you do on something like this here? Yeah, I took this trade from the low here, but I took profit on a short-term trade. I took profit on that trade. I mean, it's tightening there. You can put a trade on. I would I would say the problem here, you can't really take as good of a long-term trade because you need exposure to this move here to here. So you have to be a little bit, you have to do a bit of both, or just take the shorter term trade here. Which isn't exactly what we want on the menu. Because as soon as the NASDAQ needs to take a profit day, which it's going to need to do, obviously, it's going to fucking hurt anything that's trying to race its way to the next level. And that's what I mean by taking short-term trades here. You need to wait until the next thing, or just take long-term trades. And that puts something like this, what I would usually take a trade here, other than AMD's been the most bearish of the semiconductors anyway, so I really don't want to take the trade to begin with. But if we remove the name and talk about technical right here, okay, I'd take that trade. But where the market is, it's in a different situation, right? Can't do that. Can't really take that trade. So, someone that develops over the day. And some of this shit is just, I mean, junk. What do you do? Junk, junk, junk. F off support, pretty classic support bounce. Daily candle into support. Opened. Not much else to it. Where those moves are going, though, again, still, it's very hard to tell that angle right now. It's very hard to tell the angle, and I would say some of the problem, I'll be honest with you, some of the problem, we just use this average here. Some of the problem, beyond just the fact that it got pushed up in price extremely quickly, right? Very quickly, we pushed up anything clean energy oriented. And so we need to take profit and consolidate it. We haven't. The other problem, though, is right now, all of the any of the ESG ideas, so some of this investing that should be around environmental concerns and social concerns, right? You know what those ETFs look like and what those portfolios look like? They're just the FANG stocks. We even saw another one today, a new ETF coming out for some of these more friendly ideas, societal ideas, because again, you can't just like keep doing things that cause inequality and hurt the environment. You need to do some sort of investing for, bettering the world. That's a part of, institutions' role, regulation-wise. They're all FANG stocks. They don't actually include any of the clean energy stuff. And so that's still happening right now. So they're not getting the flow. And so that does create a problem for some of these ideas, is that they're not getting added. They're not getting added when you would expect them to be getting added, because again, they're quite literally the companies that will be the ones doing things for the environment, right? So some of those, we'll see how those change, but the flows are definitely getting impacted because of that. I mean, it's pretty clear. See how those do. I don't like this price action at all. At all. And again, I've already, like I said yesterday, I've already taken profit on all of my short-term plays, growth related. The only things that I do have is when I'm right now taking support trades and trading them up to the next level. Like I just mentioned earlier, some software companies, those are new trades. Anything I was already in, I already took profit on everything. FYI. Any trades I'm in now are longer term. Already taken all my profit. I'm liquid. The trades I'm in are long term. From some different lows. Most of them are coming from this area here, NASDAQ related. So I have room. Most are Dow related again. Most of my portfolio was Dow. Well, 2 weeks ago. Most of it still is. Let's see. Nothing flowing out of the Dow still. Funny. So funny. The only thing that's stopping this here is Apple and Microsoft. No, Dawn. You said there was going to be 14 green candles in a row. 14 NASDAQ candles in a row, and it's down 36 basis points. It's the end. Is this the top? God damn it, I just woke up and I just finally bought. You said we're buyers. This is your fault. Oh no, Don, why did you do this? Oh man. I just finally got my money in my broker. It's been taking months. Yikes. Yikes. So much fucking green over here. These offer some interesting ideas. One of my positions that sort of broke down after they broke out or traded flat definitely offer very interesting ideas. Like this kind of shit, I just don't. Some of the price action very strange. Very strange. Thanks, we're at 80 basis points on the ETF. Wonder how many points. We still have tomorrow and Friday, and I think there's some earnings on Monday for banks. Once we get through it, get back into the trend. But I would still say we got. Trend was over a month and a half. You'd probably just keep trending until the next quarter again. Very similar. Trend until the next quarter. Value doing very well, so no downside on value still for months. Banks should have no downside. There should be no real risk. Take a look over here. Yeah. Let's see. What are the boys saying? Oh shit, Bernie Madoff died. I think that means the people that lost money to him get paid now. Not to laugh about someone die, but I think people get paid. Hmm. We're waiting. Waiting to see. We have any, like, some tremors here or what? A little bit more volatility on SQ. Bearish candle there. Well, what time does it go live, Don? Why can't I trade Coinbase yet? I'm sitting here punching my coin button on my Robinhood app. It doesn't let me trade it yet. What time? You guys want to make a bet on what time it will go live? I bet. I bet. 1 o'clock. I'll bet 1 o'clock. 1 p.m. What was our most recent? What was our most recent IPO? I think PLTR was 130. I think PLTR was 130. Can I see here? No, I gotta go. I think PLTR was 130. Yep. 130. PLTR was 130. It went live. I would say 1 o'clock for coin. 1 o'clock. 1 o'clock that first tick comes in. Which will be interesting because it'll be lunch. Again, I don't know when it is, but random. Completely random. Could be at any time. It could be fun. If it happens during lunch, nothing better to do. Elgo's already sitting there ready. Market maker sitting there ready. Make me a market. Wait a second. You're telling me that's how that shit works? You don't know? No one knows? Wow. Climbing our trend. Nothing really stands out. We're just continuing our trend. Continuing our trend, the only thing that stood out was that value is doing better than expected. We expected that to trend, but it's doing better than trend, I would say. Otherwise, we had short-term volatility on growth, which it is in a 14-day up move. So I guess volatility makes sense here. I don't understand most of the price action in here, though. I mean, I don't know what all that is. A little more volatility than you need. Some of it can be maybe attributed to some ideas over here of pricing in more volatility because we're at a low. Possible. But we have not seen any reaction to this. Has been completely off. SpotVix has been completely off, so I don't think we can use anything here. Nothing here, so it's our own creation of volatility. FOMO, possible. But again, we're lengthening out time. We're continuing to lengthen our view. So, you know, we're really getting there where I would start to say, you know, I trade on like a 15-minute sort of understanding for timing on supports and things like that. You know, and we're getting pretty close to the point of everything should be from a daily perspective anyway, but even from a trading perspective now, when you're looking for entries, exits, maybe pushing out to 30 an hour, 2 hours might be the best, because even looking at volatility like that, this is not helpful. We're just looking at it for entertainment. Lengthen that horizon that you're looking at for sure. Probably a good way to handle some of the market, making new decisions. If you can't go from like a daily, I think most times you can just do it from a daily, but kind of hard if you're not. You get a tiny screen. Probably not easy. Probably not easy to look at a daily chart. But, what level? What price is that at over here? That price? I don't even know how this screen looks to you guys. I got you guys on a big boy monitor. I don't know, Don. I don't get 4,000 pixels though. That's for sure. 4K. I don't get 4K. The boys are getting involved over here. Our oil bet, tried and true, doing well. Again, this move over here was interesting, but whatever. There's an expectation that there's long term here. So again, this is all long term. There's no. We had a trade for over the weekend that worked, and then we had to get out of it. And this is all long term. We're expecting a long term move on oil, even though demand is peaked. This kind of buying here, definitely the big boys. Expecting moves. This is the kind of trade that you can sit in for a month. Don't have to do anything. Economic. Supply driven. Want to get out of as much short-term volatility as possible. I do not want to be sitting in this shit. Don't want to do it. Fang, I do like the Fang move. There's just a lot of green. It's a lot of green. It's hard to cut through some of the bullshit. Anything that looks too volatile, I'm not being a part of right now. With the dollar. Do something useful here. Hmm. This comparison is just fucking whack now from Bitcoin. Completely whack. It's just, yeah. The more it grows, it'll be a little bit easier to compare the dollar to Bitcoin and Bitcoin to gold and that ratio between the three. Yeah, it's just, I don't. It's just impossible to see past inflation right now and to get a value. It's just impossible. No fucking clue. Everyone just knows that the dollar's cheaper than it is. Because we're borrowing. That's the thing here to remember is that all the money that we have is borrowed from the future, but we're not specifically paying it back in the same way. It's going to be different. And so it's how much does that money supply increasing impact the idea of inflation? But if we expect inflation then prices will be changed accordingly before it happens. So if you know something's going to happen, you plan for it. So if you expect inflation, things are already changing, and that's how we already know that the market's already priced the inflation. What about the dollar? The dollar is the actual existence of it. If the dollar is going to keep pushing down, these things they start to really just, they get mumbled. And how much, how much of this is just fucking hard to tell. It should be more linked to the Fed balance sheet, and I think that's possible. I think there's some sort of merit for wanting it to be linked. The problem is the Treasury still. There was some volatility. See, I mean, the dollar should be down here. It should be down here. We'll see if this races here and how much this thing. The question I have here is that if this keeps fucking coming down here, how does that continue to push the equity market? It just continues to push it, right? Which on the usual, the kind of the average correlation we have, if the dollar's pushing down, it does push the equity market up. When the dollar's pushing up, it doesn't always push the equity market down. It's sort of like when we look at the spot VIX, volatility only goes up when the equity market goes down, and then it keeps just going down. Like there's only one side of the correlation. Very similar here, where the dollar does push down, it helps the equity market. Are we pushing this? Is the dollar pushing down for itself and in the equity market's going up, or is it the equity market pushing the dollar down? Because we're pricing in the inflation that the dollar's not. I would say the equity market's probably leading the dollar based on all this price action we see here, right? The equity market's leading the dollar down, which is the fucking opposite of how you'd expect it, because it costs money to go buy equities, but the equities are actually the only thing that's pricing in inflation because the dollar's not doing it. So the dollar's getting cheaper because of the equity market, because it's not as worth as much. Okay. So the equity market keeps going. CDW. Everything's up, guys. Your chimp brains, my chimp brain. As long as you're in something. So much green. Back. Retirement accounts everywhere. Increasing. What does that, what effect does that have? Well, as pensions, retirement account, everything, as they increase, those people, they look at their account and go, ooh, and they start to spend money. Not with that money, just with the money they have. They start to spend more money. What are we looking for in numbers right now? We're looking for consumer spending. We're looking at inflation numbers, those core numbers for people spending. As the market increases, you know what they do? They spend more money. What happens if people spend more money? We get confirmation of inflation. If we get confirmation of inflation, what do? We keep pushing the market up. If the market keeps going up, what happens? People start spending more money. People start spending more money, what happens? Well, we get confirmation of inflation, and then it's continuing. People are still spending. What happens? The market keeps going up. If people start getting more jobs and the job market gets better, what does the market do? We get confirmation that we're getting out of COVID still, and so the market keeps pushing up because the economy is doing well, so value keeps doing well. Wow. And then what happens? Uh-oh. The Fed finally does it. They increase interest rates, and we all have a panic attack. We all lose our fucking mind. No, we need only 0% interest rates. Only 0 for the rest of time. We live in a 0 interest rate environment. for as long as possible. QE'd out of our minds for the next 40 fucking years. So we're dead. QE will continue until America's not a country anymore. How about that? That means there's an infinite amount of time. QE will continue until we're not a country. Until the Fed doesn't exist anymore. Literally. When we're on Mars, the Fed will still be printing money because that's in a pretty short amount of time. I guess it just depends if there's a fucking Federal Reserve on Mars. If they're printing Mars currency. And guess what? If there is, I guarantee you they're going to be fucking doing the same thing over there. New country on Mars. Any new country that gets formed, they're going to be creating a central bank and printing that shit as much as they want. And it's probably going to be in the US dollar. Let's fucking go. Ugh. Catching back up. Catching up. Oil almost 6% now. Predicted. Not very, an interesting factor of today is our sell side. We only have a few tickers that are over minus 1%. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. XPEV taken off the most. A lot of these have put on quite a bit of points. Square Rank, right? XPEV is not as good example, but Square Rank is still in a very bullish move. One of the things taking profit. UMC has been the better semiconductor. This bouncing around has been expected because of how much has to do with supply chains. There's been a lot of short-term volatility here. APHA has been terrible. We already threw that out. VLDR has been very messy. Take profit on an 8% buy day yesterday, so that's just within range. But this move been very messy. The LTR is just a take profit day from a big 9% day yesterday. Still within its level. Very bullish. Semiconductors. Shop, been very bullish. Still within a trend. This is only 1.5%. TWLO, literally the same fucking chart. It's all just take profit on big moves, and then Netflix got rejected at the level that we've tracked for months. Facebook taking profit off this big move, still very bullish. Net off of obviously a big fucking day, 11%. The only things on the sell side today are specifically from the historical take profit days, and they're still within trends. All of these charts are still within trends. So again, when you look at something like that and you start to go, okay, everything is green, and the only thing that are red are things because they had a big day yesterday, and they'll probably turn green. That's, okay, what are we doing? Just confirmation of what we've been thinking. Confirmation. Oil making a big move today. It was expected. You don't know when. Expected. How the equity market does things. We do it all at once. We do it all at once. We have an idea. Oh, it might take a couple days for us all to realize. And then we all just do it at the same time. We just do it all at the same time. Almost impossible to time perfectly. Impossible. To be perfect. Timing. Fucking Dow count. Jesus Christ. Goldman, the 5%. No, see, you don't understand, Don. Banks are going to become irrelevant because Coinbase, you don't understand. You don't get it. Crypto is going to be the new currency, and companies like Coinbase are going to be at the forefront. Banks will be irrelevant. All right, why the fuck is it up 5% today? I don't. We shouldn't. Well, I avoid earnings. I'm not going to trade earnings because anything could happen. You say to ignore earnings and just trade through it. Call me fucking shocked. How much of these are getting pulled up? Hmm. Okay, price action is terrible. Very interesting. Earnings is going to be very interesting. The best thing you could do right now is like what we're talking about is these long-term trades. The best thing you could do is just be already in position and fall asleep for the next 3 months. Probably be the best thing. Sit in some indexes, sit in some of these sectors like banks, energy. Be a part of mega caps. Be a part of Apple. Aerospace and defense. These ideas. They have good merit. Not too much short-term volatility, long-term exposure. Get into these long positions and then fuck off for the next 3 months. Come back. See where you are. See what you can take profit on. That would be the best. I wouldn't even look at daily candles right now. I would just weekly it. Making decisions, just weekly it. You think about everything from day to day, like I've been talking, where we get these days where some of the, again, this is the average, but the individual companies that will sell like 5%, then be up 8% the next day, and just like this back and forth baloney. You just pushed a long-term position through that. None of that shit matters. You don't even need to think about it. We're kind of at that spot. Not that things have to continue forever, but none of this shit matters. None of it has mattered. It's just a waste. Besides when we're kind of out of it. We took advantage of the growth thing and we're just kind of done. Kind of done. What is this trend line, by the way? What the fuck? Those are all the same line. Why does the weekly chart have it on an angle? What the f... Must be bugged. Lines are parallel, they don't cross. But I mean, look at this chart on a weekly. Here's the election. We bought everything on the November 4th, day after. We could just sat in one long position. Now, we've made a lot of money from short-term trades in here. Don't take away from that. But I just mean the sense of hindsight. As always, things continue in the way that they've always continued. And things always feel the same when things are selling. But at the end of the day, things stay the same. Which is why people just throw billions of dollars into a fund and just let it climb for eternity. Right now, they're going to be the winners for sure from this point here. Short-term trades, we were able to put some fucking points on. From up here, though, they were definitely in that. We're definitely in that mood for the next few months. Through earnings, at least. Through all of earnings. We're just too much. We've already speculated into these ideas too much. Time to sit on the pile of gold, boys. Like this shit? What do I care about these candles here? Price is trending up, rallying. Then you get this random 2.5% here, and then we're right back to where it was opening yesterday. None of it matters, but you would have made a decision yesterday like I did. Like, these things don't... Right now, it's not the time to be trying to time this shit. Need to keep convincing myself. I keep looking at things and want to go take a trade. I don't need to. I keep seeing things like, ooh, let me get involved in here. There's nothing to get involved in. You're already involved. What are you gonna do? You go buy this type of shit through here? You don't need to do that. No point of... But man, they get downtrend. I get the double bottom. I can just get involved in here. Don't have to. Literally don't have to. Don't have to do anything. I think we still have some questions on mergers and acquisitions on some of the big, for Chevron and Exxon. I don't know if there's any way to, if you guys remember from maybe was it like 8 months ago, 7 months ago, or something? We're in here. All of the coming into the end of Trump's presidencies, all the mergers and acquisitions that happened on energy. So we were taking a lot of trades, just preempting some of those, and then obviously value sort of take off. So it's kind of, you kind of just captured both at the same time. I would say right now is definitely like a time, we're coming back into a time of energy. I think we understand where the demand is, the peak demand is, and also where the economy coming back, how much we're going to need in terms of on an economics side and the scaling in terms of needing oil and where that super cycle is leading to. I think we all have the market has a pretty good understanding. So I think people have a good understanding of price. which means once you have a good understanding of price, you can start to go back to the drawing board in terms of buying companies. And I would say we're probably going to get a few more, and Biden will let all that shit go through. I don't see that being a problem. We're not really, it would help. Consolidating the energy market would help the regulation side. So it's easier to regulate one company over fucking 50 of them. So there's not to say that when things get too big, you can't regulate them. Obviously, we already know that, but I'd be on the lookout for some price action that seems a little iffy. Energy companies. I'm still surprised we didn't get the Chevron Exxon thing when we started seeing those memos. I bet it will still happen. I don't know if that one gets pushed through. I think Biden would let it through, but he's so fucking moderate. I don't know if Congress would let Exxon and Chevron get together. If we're not in the Middle East, then maybe. We are leaving Afghanistan by September, apparently. If we leave the Middle East, it's possible Congress would let it happen, I guess. Yes, I don't know. I think invading Venezuela is still on the table, if we haven't already. You think I'm fucking joking, but if you don't think we don't have some guerrillas out there, and I don't mean gorillas as in the animal, I mean some guerrilla warfare. If you don't think the CIA is not actively trying to take over Venezuela, you are insane. We need them minerals. We need that oil. You get Chevron and Exxon out there right now in the jungle. In the way that government's going and all the bad things still happening in Venezuela. Time we convert the Venezuelan currency and all that inflation problem to the US dollar. What do you think? Hey, Venezuela, you want to become a merchant state or something? You want to become like a territory of the United States? All you got to do is share your resources and get rid of some of those problems for you. We'll send some. Hey, listen. Tell you what, we're taking some troops out of Afghanistan. Tell you what, you want some security? We'll send some U.S. troops over to Venezuela, huh? Yeah, we'll call it a deal. We'll train you up. Take care of your people. Stop getting these fucking terrible crimes against your people going on. We'll protect them. We'll give you guys some money. All you gotta do is give us some oil. And pay our private military companies. And we'll sell you arms. We'll sell you vehicles, planes. Tell you what, we spent $1 trillion on F-35s. We'll sell you some F-35s. Train your pilots. Need some oil. We need them. We need that lithium. We need that iron, nickel. And also, if we can use your labor force, because we like to enslave countries and pay them pennies. Because we can't do it in our own country anymore. Democracy. Very democratic. That would never happen. We would never do that. We would never do that. Never. We would never interfere with another country's government. We only complain when they interfere with ours, obviously. Interfering with our elections? Oh, God. We would never do that. Imagine being a Russian citizen, right? You're a Russian citizen. You're not a big fan of Putin, but you understand the strong man mentality, being Russian. You understand why your grandparents like Putin. Because, you know, you stand strong against the world. And so when you hear about Russians interfering with the U.S. elections, you go, that's really ironic that they're complaining about all that. Because I'm pretty sure what I learned about in school was the United States interfering with everyone else's elections in the world. Like invading Iraq, invading Latin America. How many Latin American assassinations were there of presidents from the United States? I think like 10 or so far. Oh, let's just quickly assassinate this leader and put our own leader in. Those all happened, and then yeah, we invaded fucking Iraq because of fake WMDs, and then we overthrew their government with US troops on the streets of a sovereign nation. And then we were like, oh hell no. Russia interfered with our election? That's fucked up. Okay. I mean, yeah, sure, but I mean, we're kind of the bad guys, to be honest with you. The good guys are like the private people that donate and help other people. We're kind of all bad. We're kind of the bad guys. To be honest with you. I'm kind of the bad guy. Oh man, he got assassinated. I wonder who did that. I wonder who, it's so crazy. I wonder how all the cocaine gets in the United States. Really, really makes you think. All them immigrants crossing the border. We better build a wall because all those kids are crossing the desert with all those tons of cocaine. Elephant sizes of an entire elephant worth of cocaine on their back. Really makes you think, how do we get these hundreds of thousands of tons of cocaine in the United States? And somehow they get it past the US government. It really makes you wonder. And then it's like, oh shit, wait a second. Didn't the CIA used to be the largest importer of cocaine in the United States? Wait a second. Wasn't the US Army the biggest importer of heroin from Vietnam? Hold on a second. You're beginning to tell me that the largest transporter of narcotics in the world is the United States military? You've got to be fucking kidding me. Call me shocked. We are the bad guys, boys. Telling you, Venezuela's on the table. What do you think prices? What do you think's going on with the super cycle? It's the super cycle in commodities is always based on where the United States military is invading next. Oil? Well, I'll tell you what. Oil prices go down when we invade the Middle East. Troops are leaving the ground, prices are going up. Why do you think crude's going up? Why is the price of crude appreciating when no one expected it to? Because we're leaving the Middle East? You know what happens when we invade the Middle East? Supply goes up, price goes down. We can't, this is just futures, we can't go back too far, but how it works, boys. How it works. More supply, price goes down. Just you wait. You wait. China's so bad. China is so bad. They do so many bad things, like put people in concentration camps. We would never do that. We would never put anyone in concentration camps because we've learned that's bad to do. We would never do that. And then China keeps selling us fentanyl, and we have every day, hundreds of people are dying and overdosing from fentanyl. Overdosing on bad brown stuff, that heroin, right? Fentanyl. It comes from China. Really, you know what we're going to do? We're not going to ban it from coming to the United States. We're not going to ban fentanyl from coming to the United States. But you know what we're going to do? We're going to put sanctions on them. And we're going to show them that they shouldn't do that. And that's bad. We have the ability to stop it. But we're not going to go that far. This is a free country. People want to put it inside them, we'll let them. But we're sure as hell going to complain about it a lot. God. It's going to be so boring to be in the military. Imagine you're like 18 right now, joining the military. You'll be so fucking bored, mopping in the rain. There's no war going on or anything. It's so fucking boring. What do you want to join the military for? Camaro. Well, now it's like, fuck, dude. I'm not gonna join the military. They're wiping out student debt. They're paying us checks every month. What do I want to be a fucking? Why wouldn't I just be a private citizen? Fuck it. You get paid anything in the military anyway. I'll just be a and stay home, couch potato. My parents will. They won't even be upset. Like, well, you're collecting money from the government anyway. Same thing. Gonna need to start another war, boys. Venezuela. Telling you. What's next? It's gonna be one of those like Venezuela shot a plane down or some shit. Remember when Russia kind of invaded the Ukraine and stole Crimea, and then we didn't do anything? But we complain a lot about Russia. But you know, remember how Russia invaded a country, and for months they had thousands. We had satellite pictures of thousands and thousands, like literally thousands and thousands, like tens of thousands of Russian tanks on the Ukraine border for months. For months. And then they invaded the country. We're like, oh, fuck. I can't believe they did that. Yeah. And then they shot down multiple planes. Transportation, like just like cargo planes, I mean. They shot down a passenger plane. And then Russia goes, listen, that's just a militia group, okay? We have no fucking clue. You know where they got that from? From us. Every time we do that to other countries and people, we go, listen, that's a U.S. company, and yeah, there are citizens, but listen, we ain't got nothing involved in that. We don't know nothing about that, and we don't do anything, right? It's like, but as soon as somebody else that's smaller does it, oh fuck that, we are going in there. Even if they thought about it, they could just fucking think about it, and we're gonna go invade the fuck out of them. You thought about shooting down a plane? You shot something? Oh, you're fucked now. We're coming. We're coming for you. Where's Dick Cheney? Dick Cheney right now drawing up the board. Dick Cheney's probably on the phone with Biden right now. Texting him. Cheney's ready. I talk about this because this is kind of the cycle doesn't get broken until we start doing shit like that. That's one. Uh, that's one of those like Ray Dalio comments where he gets really extreme, and he's like, the cycle only changes with like revolutions and wars, which it's the way to phrase it is that those things are always going to happen. And like those things are always going to come up, right? There's going to be some sort of global conflict and these things happen and then it changes the cycle. Like oil, right? That's literally what I just talked about is every time we do get involved, it does change up that supply chain, right? Those things are, but the timing is always different. And so the way we react to it is when those things start and then we start to price around that. And like those are real things for sure. It's not so, but it's not like a religion thing. Or like, I don't mean like actual religion. I just mean it's not, the cycle's not that much, not like a religion. It's different every time. And the revolution this time might be from normal everyday people. Like we have The United States, we're kind of sick and tired of shit. Maybe that's what changes the government. Maybe we do just go fucking invade another country because we have literally nothing better to do. Like, what if we just have nothing better to do? What if we need to keep spending money and the only way to keep spending money is to just fucking go invade Venezuela? what if we had nothing better? Like, and it'll affect. How else is some of this shit gonna? We gotta do something. We let think about this. How ridiculous this is. The U.S. government pays Elon Musk tens of billions of dollars a year. I mean, it's more than that, but tens of billions of dollars just to Elon to go launch fucking military satellites into orbit. And we don't even need to. They don't even have to. They just have nothing better to fucking do, so they just fucking pay. I don't even know what the number was last year. I think it was like, I mean, some of the contracts were like 150 billion, 250 billion that they gave them over like a certain amount of time. Because we have nothing better to fucking do. We just launch shit into space, and it's like, okay, fuck it. Why not? Like, there's not even any like worries about this dude's literally gonna be on Mars, and like we're already got rovers and shit on Mars. Obviously, we can land on Mars and put stuff on Mars. Like, we don't even have worries about some of these weird things that we're doing and like the consequences of some of the things we're gonna do. We're just gonna go set up a city on Mars, and like no one really thinks about it, but it's like that's like happening right now. And like there's this whole thing with investors, like the couple conferences right now of like all the asteroid mining and the market for that. The market for just collecting ice on the moon is already like a $500 billion market a year right now. Right now, it's already a $500 billion market to collect ice on the moon from one of the fucking caps. And it's already priced in for like a $500 billion a year. That's such a weird fucking thing that just happened. Like, and these things are like these weird it's true. There are these like weird revolutionary things that just kind of, we just do these things. Like, but they are a part of long-term investing, for sure. The way you revolve around the cycle. Yeah, we're kind of in the boom. We're in the spending. It's gonna be fucking a while. It's gonna be a while. And the only way it changes is if something does happen. Otherwise, we get in tune with it. Like, most of this is mega caps. Again, this price action here led us to in here a little bit. We're not at 1% yet. S&P at break even right now, but we have this trend line. It'll be interesting to see how technical this gets. It's been on this for a little bit of time. The Dow just continues to climb, which, again, this should tell you what you need to know, because it's one thing for growth to be taking some profit here because of how it's been doing, but for the other side of the market not to even care tells you a lot, right? But they're still connected, which means they're going to pull each other still. And it's usually the downside which will pull the other things down. This is exactly showing some of the, even if you get some take profit here, this is up 60 basis points. I mean, this green's not going away, and it doesn't matter what it is day to day, right? It's about week to week now, really. And your section's funny. I wonder, here's another weird sort of big idea question. I wonder how much is being priced in for sort of a no, not specifically COVID, but COVID is being added to the equation. How much is being priced in for this never-ending pandemic sort of thing? Because that's sort of where the pricing is for when you look at some of these bio companies and some of the action, like the big pharmaceutical companies. A lot of this price action is I mean, it has to be around this sort of revolving pandemic idea, and that it's not going away. And I talked about this like a month ago that COVID's never going away. It's like the flu never goes away. Like things will go back. Things are not like gonna go back to another normal. This is the newer normal now. Like I'll probably always wear a mask now in New York City. Cleaner, feel better. Take it off when I'm doing something. But it's the same with some of these vaccine things. So how much every year now are we sort of getting into this weird, you know what I'm saying, this weird spot where it's not even that we need a virus. We'll just start making vaccines. I think that's being priced in right now. Like if I ask somebody, like somebody at an institution right now, do your clients, and like I will. It's an interesting question to ask is, do your clients right now think on like the pharmaceutical side that due to the way the pandemic worked, that these big pharmaceutical companies will just continue to get funding to just, even when there's not a new virus, to just continue to be making vaccines for the future, which they technically do, right? You're always doing R&D, but it's more than that because we just saw how quickly you need to be able to roll out these things and these programs and be able to get to distribution. You need it done and ready. Otherwise, there is a fucking problem. Are we getting pricing right now that's based on the fact that we're going to be having this revolving vaccine thing every year to year, just creating new vaccines for the possibility of a virus and just have it be prepared? Maybe create a vaccine that's so general that it can attack anything. Like these sort of things. That kind of idea calls for significant size and funding, right? That's government spending that, again, we're in a government now that's willing to spend an infinite amount of money and does not care about inflation. The Fed gave the go ahead, spend as much money as you want for as long as you want. We've already been doing it for 13 years, mind you. 13 years of QE. Tens of billions of dollars every month for 13 years. We're doing $120 billion a month right now. 0% interest rates. Barely any inflation. Government spending, sending people. Again, that funding is never stopping. Some of that you'd have to imagine is being directed towards this idea. So, like, some of this pricing, that's where, like, okay, we can remove some of this short-term volatility here and just be like, okay, some of this stuff, who's getting it, where, J&J is obvious a player. This pricing here, I mean, is this in the right spot for that idea? Probably not. But then here's what you think about, and this is where you'll see it. This idea is, look at this type of shit here. Like this move we captured with Anthem, right? We got in right over here. Again, the other chart, that's the breakout candle right here. This kind of thing, like with Anthem, United Health. These are the true players in that idea. And if you take a look where prices on these companies, these are not even people making fucking vaccines, but they're the ones that would be facilitating all of these kind of things because they're the ones that are just involved and they're the direct recipient of government funding, right? If you look at sort of where we're on for a trajectory and how much pricing's here, you would say, okay, there's actually some sort of pricing going on right now for this idea of this infinite amount of U.S. funding for the healthcare side to continue to provide resources for things that aren't even happening. And this is like the U.S. military budget. Whether we're in a war or not, we'll just spend $1 trillion a year on it, right? It's like this sort of pricing here. You'd have to imagine it's more than just this technical idea. There is like some long-term ideas of just nonstop fucking funding on this side because it's sort of the next frontier of things that you can do, and then there's so many things that, you know, that come after it. Well, I mean, of course, scientifically, you cannot make a vaccine without understanding the viruses. Chris, well, of course, of course. That doesn't mean you can't always be paying for it, and that's where the equity side comes in. They don't need to know what the virus is to be working on something, doing something. Like the U.S. military, we'll find something. Don't you worry. We'll find something. Because again, this is the thing with when you look at these companies, we're done. We already did it. The it's done. There's still more. We already paid for it. So why is the price going up still? We've already paid for it. Why would we be okay? So again, this whole COVID thing has happened, right? What happened? Well, as soon as the vaccine started to come out, prices were coming down, right? But all the speculation is for that some of these companies would have a vaccine. Okay, they did. They got paid for it. They're paid for it. Okay. US government paid for it. World governments paid for it. That's it. Like we've already done it. Okay. If everything is priced in for that, equities price in things, they speculate on it, and then they get confirmation and then reprice it, right? All right, we've already repriced all these because this is when the vaccine came out. We re-speculated on how many more would be needed, and we confirmed it. Now we're basically here, and some of them have come out and said we'll have like 10% more, whatever. Everything's already done. Okay, if price continues to go here, then what the fuck is the price going up for, right? This is where that speculation comes in again for the next thing. And there doesn't even need to be a thing. It's just the idea that it could be one. And whether or not the world is going to be what we call normal from before or different. I would say prices come up here on pharmaceuticals and bios would be a direct confrontation to the normal idea. On an investor idea, it doesn't mean it needs to happen. You have to actually have another virus or vaccine. But I think the fact that people think it and will pay for that idea is like that's the whole behavioral thing. If investors are willing to pay for it, there's investors right now that are buying up vaccine companies or like pharmaceuticals and bios, not for this COVID related thing. We've already done that. This is for the next one. And that idea is kind of it's a weird idea to think about. That if you're going to buy more of these companies, it's because you're thinking about the next one. This one's already done. We already made the fucking vaccines. We have enough. They already paid for them. Whether they have to keep making more, but already paid for it. The money's already in their hands. Like it's already happened. On a money standpoint, the price is already there. There's gonna be more vaccines and shit, but it's already paid for. Then that's where the market is now, and that's where I've just changed my mind on long term, just fucking long term, because it's like we've already priced in inflation. We've known long enough now. This over here, we were just getting confirmation. Now we're done. Now the market knows. COVID, we understand it. There's things like travel that still has some short-term vol. We don't fully know. We don't fully know what the government will do for regulation on this, so people aren't pricing this fully out. So it's interesting. And this is where I think what do I want to look at? You look at this price over here. When you think about aerospace and defense, right? And I started getting really bullish on aerospace and defense over here, and then you have tickers like we haven't really mentioned LMT because obviously mentioned all the others, but anyway. But you look at something like this here, right? And it's like, well, what the fuck happened over here? Why is it that aerospace and defense is now just... This is, again, one of those weird things that investors will do this, and price will do this, where... Think of, like, BA, right? There was all kinds of problems, right? All kinds of fucking problems with all of their things. But just the sector itself, the way this starts coming up and taking off in this area, and we get really hot on the sector... What is it that's driving what is driving investors' behavior to all of a sudden want to go buy aerospace and defense, things that get military contracts and contracts from the government? We know that government spending is going up, right? Where does it usually go? That's the only question. So it's like infrastructure. We know it's going to infrastructure. Infrastructure gets bid. If that's already happened, those things have happened. We see them. If prices continue, then we're talking about something that hasn't happened yet, right? That everything, Is anything happening on the military side for more military contracts right now? No. There's literally not. So then what the fuck's happening over here? What is all that? We sold this shit down because it seemed like, okay, there's literally nothing gonna happen. Nothing's gonna happen. So then what is all this? This is just because it's a cheap price? Right? And so again, this is where we get where we are right now. You have to go very long-term macro ideas to make money, right? And that's where you can just start to look at some of these things and go, okay, from this pricing alone, what exactly is the major idea here? What's the major idea? I'm not doing war games and shit like that. I'm just talking. There's obviously some pricing that there's gonna be there has to be some confrontation. You need some confrontation to cause military spending, right? So where is it? We haven't had any. We're literally not doing anything. So, again, there has to be some reason why people are thinking that way. And if the confirmation is that those things are not happening, then price will come down, right? And so when we talk about what would be the confirmation for aerospace and defense, well, it would be government contracts. And we'd be able to see that. But what would lead to government contracts to confirm that there'd be contracts speculating in the first place? That would be some sort of direct confrontation with another country, not just games in the South China Sea. No one's thinking, no one even has put that, no, that's not going to be the next one, right? We specifically avoid world powers because, again, two world powers that have nukes are not going to do anything. We're just going to dick around and jerk each other off for no reason, right? But, again, we're pretty fucking good at invading other countries, so. So, somebody thinks it. Somebody thinks it. That's what I would say. Somebody thinks it. Maybe it's just the fucking US government. Maybe it's just them. People, there's more government employees than anyone else. Probably the ones buying their own damn stock. I think a lot of it has to do with space. I would say space. I think there's definitely some. And it's because now that we know it's all going to be private companies and everyone has seen what. I think it's absurd that the government, I mean, it's fucking absurd. Eight people in the United States have $1 trillion in total. The top 8 people with net worth have $1 trillion between them. And then the government keeps paying those people. Like Elon, like I like Elon for his ideas, but like some of that funding is fucking insane. They literally give it to him. They literally give it to him. That's the weirdest part, is that they give it to him. It's not like, oh, here you go, board of directors. No, they like straight up give Elon the money. And he's just fucking launching shit, and so they're going fully private. We're not like NASAing the fucking moon, or yeah, they're involved, but the private companies are the ones getting all the contracts. So it's like those companies, I think, when we think about government spending and infinite QE and these things, those companies should still see fucking major contracts to come through. Like the spending is not going to stop, and they're like the next aerospace and defense, and those ideas are like the next big fucking contract makers, because there's going to be some sort of conflict around. There has to be some sort of conflict around the amount of fucking satellites we have. Just that alone, not to mention the moon and Mars and shit like that. Like there has to be some sort of conflict there that's going to require funding. I'd say there's definitely some long-term, I mean, long-term ideas, but also right now, like there's, do you know who owns the most satellites in orbit right now? It's fucking SpaceX, a US company. That has to create some sort of conflict with other countries. That we can just have, we're over their country in fucking space. You don't think the CIA doesn't got one of them satellites? We've been doing that shit since the 80s, 60s. Since the 60s. You don't think Elon gave one of them satellites over? CIA? Yeah, no big deal. You guys pay me hundreds of billions of dollars a year to launch your stuff. No big deal. I'll give you a satellite. I launch 60 satellites a week. I've got 7,000 satellites in orbit right now. We're about to launch another 7,000 this year. No big deal, guys. Internet all over the world. What do you think about this? Again, put the pieces together. Biden says we're going to lower. Did you see what he's going to do? The next plan is to lower internet costs, like broadband and all these things, by basically providing funding to lower the cost, which is through infrastructure ideas and all these things. It's really quite interesting that the U.S. government is paying SpaceX to launch satellites while that company they're paying is launching internet satellites, which is going to offer cheaper, faster internet. At the same time, we're going to be paying funding for cheaper internet. Isn't it the same fucking thing? Why is SpaceX still private? Really makes you think. Kind of makes me think about that picture with Obama and Elon walking next to the rocket or whatever. Like 2008 or whatever. Really makes you think. Right, folks. Again, we're theory crafting. We're just having some fun. Spitballing ideas. Get the ball rolling for the next major idea. Because again, we're still using technical reasons to make trades, but we want to have some macro ideas and theory of craft, sort of some ideas so that when prices are moving, we think about, okay, someone else is thinking about that. And again, we're just people investing and trading, and somebody's got some ideas, huh? I think the oil one is difficult. The oil one is definitely big picture kind of things, and it does dictate a lot of things, and it's important. And so that one definitely you have to go a little out of the box with that one and think about conflicts. And same with like the aerospace and defense one. You don't want to get too far, and you need to know when it's serious. Obviously, I think they're warranted to discuss and think about. I think the space one is obviously a big one because again, we have some of these things are a little I mean, it's hard to tell. We did this thing so long ago, the whole space thing so long ago, and now it's only becoming a thing again. Like, it's such a weird timing, hard to tell because we never really interacted with that. In the government spending, we spent so much money on it back then. Now we're spending money on these things again. It's like, and we have infinite spending potential. Some of those things when we talk about your ability to buy something and then in 5 years get a return on it, that kind of thing. Like, we're in that weird spot right now where, again, you're gonna have to think about those things as a trader and investor. Like, it's like Bitcoin. I put Bitcoin in, and in a year I've made the money there. What's the next one? Like, if I take profit on that, where can you put $1 million right now? That article always pops up on like Bloomberg. If you have $1 million, where can you put $1 million right now? Where would you put $1 million right now? For like 5 years from now, right? That's an important trade to think about. You can't put that all in that with some fucking spy calls. So, like, those kind of things, I think, is going through everyone's head right now. And I think that's probably something to try to find an area where what's the one that's gonna. It's not so much what's the one that everyone else is gonna do, but which is the one that is possibly not getting the attention that it is going to get. I think the space one's pretty obvious. It's so up in the air. And the problem is that it's all private. That's my one promise is that it's not going to be Boeing. And Boeing is not going to be the I think we've already proven the fact, and it's like the whole Tesla thing. Even like hate to keep talking about it as if it's just Elon, but kind of the reality. It's like the whole EV thing. Tesla's kind of just they're just so far ahead. It's just fucking. Well, how do you? I don't know. Space Big Candle. Really? Where? because this has not worked so far. We're not getting anything down here. We ain't getting shit over here. Ooh, we go zoom into 1 minute. All right, let me take a look. Oh yeah, big gap right there. 86 basis points. Nice one. You get that one over here too. And that one led to this one. But maybe. It's over moon, it is. Take a look on the 2 hour. I don't know what to tell you guys about this one. In space, this is a weird. This is. Here's the thing to think about. Okay, last comment before we go to lunch. I just talked about the last 2 days of this long-term thinking, right? And we're betting on these very long-term macro ideas. We're making decisions in like a technical shorter term, but we're doing it because of a long-term idea. I want to push it for a while. Is space, SPCE, Virgin Galactic, are they going to be the ones pioneering and the ones really doing anything in space? Would you bet on this company over other companies that have already been doing it, or the ones that will come after? Or even if we just did this description we just talked about with SpaceX, would you bet this over on a long term? Would you bet Virgin Galactic over them? The answer would be no. And so when you turn your gauge, if you think about this chart I posted here, right? On a technical and a short-term understanding, yeah, it should be coming out of this low off the support and going to the upside here. But if you then go, okay, well, right now I don't want to make decisions like that, which the market's doing. Well, then all of a sudden this starts to make more sense. That I wouldn't bet on this company in the long term. I'm betting on it on fucking 1 month here. That was the plan. But as soon as you start to put into perspective what I'm talking about right now, it's like, well, fuck, man, I wouldn't bet on this company. I wouldn't do it at all. I don't think it's worth it at all. I wouldn't hold this. If I had to hold this for 1 year, I would never touch this. That kind of idea, when you start to do that and realize that I would rather have the cash to buy something else, that's where you need to know when that moment happens, and that's why I just started talking about it yesterday. It's like, you got to realize in that moment how people will change their mind all of a sudden. And that's happening. It is happening. I would chalk up a lot of this to people don't want to put their money in and have to hold this for a year. That's how it is when you buy shares. You're not going to hold it for less than a year because you need fucking capital gains. Yeah, you're going to wait. I would wait to buy something else. I do think that type of thing is happening. And that's what I mean by this longer term understanding, is that if someone's going to put their money in to go buy the underlying, then they're going to hold it for a year. And it needs to be something that they actually, at this high point in the market to all-time highs, that they actually think has this long-term view to it, and not just these gamma moves and these things based on betting and how we keep pushing things. We push things to all-time high, and then things either continue on a trend because of a long-term or rally because of these short-term things. We're in that weird spot where we just change very quickly. Long-term, I would say this explains it. I would say that explains a lot of. I mean, obviously there's some news and shit here, but I think that's happening a little bit right now, for sure. People are really getting, like I'm talking right now. I think that's literally what people are thinking right now. They're going a little bit more. They're getting a little bit edgier, thinking about, okay, well, what exactly is gonna fucking happen here? What exactly are we? Did coin hit? Nope. Gonna happen during lunch. 1 o'clock, I say. I say 1 o'clock. Maybe 1:30. Like PLTR. Again, the coin thing, we'll see. We'll be able to talk about it this afternoon because it will be live at some point today. Again, it's random, but it usually happens on like whole numbers. They don't happen like it's not going to be at 1152 here. If it did, then someone probably made a mistake, which is highly doubtful. So we'll talk about it when it comes in again. It'll be the thing to watch here is when this Coinbase thing goes live. The thing to watch is the relation to actual Bitcoin. That's the thing to watch because again, the volume is already getting higher right now because this is actually going live. And you need to think about why that would be the case. Why would Bitcoin be increasing for a company that has to do with Bitcoin other than just media? There are reasons and things to think about from a holding standpoint of how and why those things would be connected. Other than just the fact that its fucking name is coin, right? There's things to see here, the thread and the connection there. So I'll break it down and close if I see something. Again, we're not thinking about today's price. We're thinking about like a month from now. So how would Riot and Mara work? I don't think about these at all. These are even more of a waste of time in terms of getting exposure to Bitcoin. This is like people will buy this kind of stuff, or like the Bitcoin ETFs, right? They'll buy it because they want to buy exposure to Bitcoin. Then just buy fucking Bitcoin or the actual coin, right? We're not at the place right now. I would say there's nothing you can even see here. That's the problem. There's not, everyone knows this, that if you want exposure, you just buy Bitcoin. That's such an agreed upon thing that this kind of thing, the volatility could be 100 different things. And so I would say leave these alone. You can go make a better profit on Bitcoin itself. The relationship between these companies, it's too new. We have no data, just like I won't trade the IPO. And just because I won't trade the IPO, I'm not going to trade the companies revolving around it that may or may not get demand because of it or not. Like this is selling now because why? Is it because the Coinbase is going live? Bitcoin's up. So these things, again, they're not connected. This is all flows. Everything here has to do with flows. Why is Bitcoin going up? Because more people are buying it, so there's more money flowing into it. That's it. Why is the market going up? Because money's flowing into the market. That's it. That's literally the market, and that's where that long-term macro understanding comes in, is where is the money going to flow? Where's the government going to spend money? That's where the money goes. People buy the equity. This kind of thing, like Riot Mara, or any Bitcoin ETFs or anything, it's going to be a long time before those become a better option than just buying the actual damn thing itself, right? And so I expect nothing. I would just expect nothing. If anything happens, I would just not even, I will never even look at those charts again, probably. Only looked at them because you mentioned them. So, and the Coinbase thing is not the same because it is a big company. It's going to be an equity, and there's different reasons, and they're based on fees, right? But the thing there to remember is it's probably not going to be it's not going to be in demand as much as Bitcoin is, right? And so we want to see the relationship there and see if there's possible hedging involved. That's the kind of the question I have is what's the hedging involved? Like, are people like, what do you, if you're going to buy Coinbase, are you buying Bitcoin as well? What do you do there, right? That's my question is, if you're buying Coinbase as an institution, do you buy Bitcoin as well? Everyone's already buying Bitcoin, so are you going to buy Coinbase then? Like, that's kind of double dipping, but you're really not, because it doesn't have exposure to Bitcoin anyway, other than the fact that it allows people to trade it. So, you know, these things are not, we don't know until we see it. So it's going to be like a month until we probably have a good understanding, right? Probably a month. Just like it's going to take a year for us to understand inflation. So we're just speculating on it right now. But yeah, it'll be interesting. I mean, it's interesting, and it's always fun when we get more IPOs and more companies, and I'd say it would only be good for the NASDAQ, right? It'll only be good for the NASDAQ. It'll only be good for it. It will not be bad for it at all. So only could be good, bring more people in, and that's what we want. We want more people buying because we're in. We want it to keep pushing price up, and let's get fucking crowded, right? Let's get crowded in here. Anyway, guys, interesting day. Interesting day. Again, another green candle. The more green candles, the more green it gets. That's what I would say. Gotta be careful out there if you're still watching. I'll see you guys this afternoon. Again, don't watch too much during lunch. Do not watch during lunch. I'm going to turn my charts off. I'm not going to look. I think it's an important practice to have right now. That way you're not in trades that, if you're in a trade right now that you think you need to watch during lunch, then you should just exit the trade right now and go buy something that you don't have to watch. That is a very important concept to have. So I would do that. I'll see you this afternoon, guys. See you.